What is up, guys? Today I'm going to be talking about multiple time frame analysis and how I spot it and what the importance of it is. So multiple time frame analysis is basically you're looking to see if the higher time frames are bullish or bearish and where the higher time frames want to head, right? So does it want to keep going higher? Does it want to keep going lower? And essentially with my strategy, I look for those pullbacks to buy or sell to continue in the trend it's going. So multiple time frame correlation is very, very important, especially in my strategy. So I'm just gonna, like I said, get right into it, and we're gonna go over how I spot this. So I do the weekly, the daily, and the 4-hour time frames for multi-time frame analysis. And as you can tell right here, I still write down essentially what each one is, bullish or bearish. So then when I'm taking trades, usually on the 4-hour or 30-minute, I can see these just for a reminder that the higher time frames, what they want to do. Essentially, if they're all bullish or all bearish, it's a good thing, right? You want to then sell with the market and look for good areas of interest to then sell that market or buy that market in the direction it wants to go. So obviously, sometimes, like this example, bullish, bearish, bearish, we have the weekly bullish, but all the other twos are bearish, right? In that case, you're still overall looking for that bearish trend. But like you guys know, there's trends inside of trends. So 30-minute could, want to go higher or lower for that certain small period of time. And in that case, I would still take wherever the hell 30-minute wants to go. It'll just be based off of 30-minute levels, not the higher time frame levels, if that makes any sense. So we'll get right into it. Let's start on the weekly. So essentially the weekly, let's see, how would we graph this, right? You want to spot the highs and the lows, essentially, and you kind of want to just follow it back to see if we're bullish or bearish. So we can start off by simply seeing, let's go up a little bit more, actually, just so I can show you guys. You can backtrack this. So obviously this would be a high right here. Where is the low? Which the low has to be to the left of it. You can't have the low here because this high was formed before that low was. So it wouldn't make any sense for that to be the low. The low has to be before where that high was. And obviously you can tell there's just one red candlestick barely pulling back for the continuation. And it just depends on where that red candlestick is. If it's just going sideways, I don't consider that a low, right? So like this, I wouldn't consider this a low because we just went sideways to then continue go up. We didn't actually make that down move before continuing to go back to the upside. I would probably consider this a low, which is kind of still iffy, but we did have that actual pullback and went back before continuing going back up. This one, that didn't happen, right? But it's kind of the same thing. This just a little bit more of a pullback-ish compared to this. But if you don't want to take that, we'll just play it safe, and we'll say that low is right here because you could tell we actually had that pullback to then continue going back up. So that's how I'm going to do. Now, so this would be bullish, right? So for it to continue being bullish, we need a candlestick close above this high, or for it to switch bearish, we need candlesticks closing below this low. And as you can tell right here, candlestick closed below that low. So what we would do is we would drag that low down to where that low is, and there hasn't been a high, so we would keep that at that same high, wait for a close above or below one of those areas. You could tell close below right here, so we would move to that low right there. But then this high would actually come down now because you could tell we made a high right here, right? Okay, so now what comes first, that low or the break above the high? Which the break above the high happened first, which is candlesticks, not candle wicks. It has to actually close. But as you can tell right here, we did, so that's where that would be. The low wouldn't move up because we didn't have really a pullback at all in here. Boom, right? This is where we would be. So we need to close above here for bullish, and we need to close below here for bearish, right? And it's really as simple as that. Right now, we're more on the bullish side, but as you can tell, if you look at the weekly, it kind of looks like it wants to keep going down. But yet again, I go off based off of levels, so we need actual confirmation off of that, which is another topic for another time. But for right here, weekly would still be bullish on this time frame, right? And when you get really good at it, you don't even need these lines to help you. You can just kind of spot it out, right? So yeah, let's go down to we're in the daily now. This is a little bit of consolidation, so it's not really too much I really want to look at. This probably isn't the best example. Let's move on to a different example really quick. Okay, so daily on this time frame, on this pair, GBP US dollar. So we have this high. We'll just point this high out. Then this low would be right here. Close below that low. We need a new low, which would be right here. Wouldn't say a high yet. Still close below that low again. So that new low would be down here. That new high would come down to about right here, right? Still nothing, still bearish, right? So now this low would be down here, and the high would drop down to this right here. So now we're bearish on the daily, and it looks like we want to continue going lower, right? Because we have multiple levels to the downside. Don't get confused by all this. This is, like I said, another topic for another day. But essentially what I'd be looking for is a pullback maybe to this area of interest to continue going down, or on the 30-minute we have resistance that we could possibly go up, reject off, and going down, right? I'm not just playing off these levels. I actually have to have an entry. If there's no bearish engulfing or any entries that we're going to want to keep going to the downside, I'm not going to take that. But let's go down to the 4-hour and do the same thing, right? So we can have a high right here. That low would be literally right here. Close below. We move this down to this low. That high would stay because we didn't have another high since. And then we broke below. So now the new low would be right here, and the new high would be down to here. So we're also bearish on this time frame, right? So like I said, you have to also understand where that breakup structure would be. So essentially where the market switches to bullish on this time frame, which would be, like I said, right here. So if we close above that, now we're turning bullish, right? So now we can see if we actually ended up breaking and closing above, we could see price, maybe coming up here, retesting the area of interest to then make it move back to the upside. But I'm leaning a lot more towards having this pullback to this area of interest or 30-minute resistance to then continue going down to this support level, which would be my take profits. So if we go down to the 30-minute, this is the very small resistance we have on the 30-minute. Used it as support, rejected off of it. So if we can come back up and test that, it'd also be kind of like a double top. And if we have a bearish entry model, we can enter into that. Then the same, either the take profit of the lows on the 30-minute, or you can still probably do that support level since it is in favor of those higher time frames. Yeah, so usually I'll take those 30-minute entries and have 30-minute take profits. I'll rarely ever have 30-minute entries and take profit the same as what I have on the 4-hour, just because they're different time frames. There's trends inside of trends. There's no point in doing that, essentially. So that's basically what I do. I understand what we are doing on those higher time frames. As you can tell, we're all bearish, so we want to go short. And on the weekly, it looks like we can have potential a little bit of a pullback to continue going back to the downside. It looks like it wants to keep pushing lower because we do not have any sign that this wants to reverse and start going back up. So why randomly take a trade like that when you can trade with the trend, right? Because the trend's your friend. Like for right now, I could definitely tell that this is bearish. Everyone probably could. But yeah, you would just kind of backtrack those highs and lows, and you just backtrack and backtrack until you get to where the price currently is, and that's going to be your bearish or bullish thing, right? That's basically how I identify. We can go over one more really quick just to show you guys some more. Let's go over this, and we're going to backtrack, right? Because that's essentially what you do until you really understand and can see everything. Let's say this is the high. Let's say low would be like right here. We close below that low. So now that low would come all the way down here because we didn't really have a pullback at all or lows all throughout here. So that would be your low. And then your high would come all the way down here because that's going to be your most recent high compared to where that low is. So then our new low got broken again. So now our new low would be down here. And our high would still stay the same because we have no other pullbacks coming back down to that area, right? So this would still be bearish as well. So all time frames correlated, and we're looking for an area of interest, support, resistance, whatever, to then continue going lower to different areas of support or area of interest in general, or lows, right? Because we also can implement liquidity into this. So like, for example, right here, we have a low sitting there. So if price eventually comes all the way down here and sweeps those lows, we can have that reverse to then keep pushing to the upside. But when you're trading liquidity, you want a break of structure before actually entering. You don't want to just enter when we sweep down lows, right? So we need an actual entry. You need an actual entry model off of everything. That's a very, very big part of trading. Just understand that. Don't just enter off once we sweep lows. That doesn't make any sense. And obviously, you can see us sweeping lows on multiple different time frames, and different time frames can do different things essentially because we have trends instead of trends. But like I said, those higher time frames are going to be a lot more predictable. You're going to get a lot better readings off those higher time frames. Like for example, we have 2 bullish here and a bearish on weekly. So I'm overall wanting to go long essentially. So if we can come down here and sweep any of these areas of interest to then take a bullish entry to the upside back into this resistance area, which is also would be an area of liquidity up here. We have those highs. So if we come down here, have that higher low to then take that trade off of it into that sweep, that would be perfect, because then by the time it hits that resistance, we sweep price and then we continue going back to the downside, right? Potentially, or we just keep going back up to this minor area of interest up here. So that's essentially what I do. That's how I read my markets. That's how I understand where market wants to go every day. It's pretty simple. Just make sure to take note of what each time frames are so you do not forget. That's a huge part of it. Because if you forget and let's say it's all bearish and you're trying to buy on bullish, or then you get stopped out because the whole trend wants to actually keep going lower, it'll screw you up. So I hope that this video helped you guys. I just wanted to make a quick one on how I find time frame correlation and how it plays into my strategy. So if you have any questions, feel free to drop them down below. And yeah, that's pretty much it. If you want a little bit more in depth with everything and my trading strategy, drop that down below as well, because I'll definitely drop more videos on my strategy and how to trade it. So yeah, that's really all I have. Hit that like button and subscribe, and I appreciate you guys for tuning in. Peace out.